Sutton. I'm a current law student at the University of Wyoming College of Law, and currently I'm working as an incorporation specialist here at Corporate Direct, where I work for my dad and other rich dad advisor, Garrett Sutton. And this is the next edition of Ted's Book Talk. Today, I'm joined by Andy Tanner, who wrote Stock Market Cash Flow, which is a book in the Rich Dad series. Andy is a fellow University of Utah alumnus. Go Utes.
Everyone get their U up, throw it up.
Yeah. Even if we have some BYU fans watching, you're welcome to, purchase this book too. We're not going to discriminate there.
Okay.
Yeah. And also former University of Utah basketball legend. And
well, I don't know about legend, Teddy. I sat on the bench for a little while up there, and we had a good time playing ball. But legend, I think that might be pushing.
You played more college sports than I did. You scored more points than I ever will. So, I'll consider you a legend for that.
We'll take it. We'll take it.
Yeah. And then you are a current Rich Dad advisor now.
Yes,
and
sir.
Joined with Andy are his two boys, Zach and David. How are all of you doing today?
Good.
We're doing great, Ted. It's good to be with you.
Yeah, it's good to be with you again. It's been a few years since we last saw you guys. Andy, I first met you 4 years ago when we were in Chile traveling with Robert Kiyosaki for Rich Dad events. And then I met you two, Zach and David, in Australia 2 years ago. And in addition to that, it's really cool because my sister Emily's gotten to travel with you guys as well in, I believe, Paraguay and Argentina. Is that right?
That's right. Yep. Emily's with us in South America. Yeah.
Yeah. And, all of us have had a great time being with you guys. And, obviously we're with Robert. And so, every time I go to one of those events, I just learn so much about financial education. It just it opens your mind. There's really a paradigm shift there. So is there anything that any of you guys have learned just from being around Robert and traveling with him over the years?
Well, that's a good question. I'll let you guys go first. We have traveled with Robert extensively for years and years and years. We've been to Europe and South America, as you mentioned, Australia, and we've been to Asia Minor, Singapore. I think I've pretty much been everywhere with Robert. So it has been a great learning. What's the biggest thing you learned, probably?
The biggest thing I've learned was probably learning infinite return, because it was really fun learning about that and seeing how you can have no money in the deal and still get cash flow. And it's really fun teaching it to the crowd.
Yeah.
So that's what I've learned.
One of the things about Robert is if you travel with him, you're going to wind up on stage teaching. So these guys, in fact, you got put on the spot and had to teach infinite return in Argentina, right?
Yeah.
What do you say? What would you say an infinite return is?
It's where you have no money in the deal and you still get cash flow.
These guys are both math whizzes, so division by zero doesn't bother them, I guess. For me, it's a little complex.
Right.
Well,
just being around Robert, that you kind of become less intimidated by that, I guess.
Yeah.
Yeah.
Me, I would say the biggest thing I've learned from Robert is, that it's often said that a job is when you do something you don't enjoy with people you don't want to be around in a place you don't want to be for money.
Mm-hmm.
But a calling is something you would do for free.
Mm-hmm.
And, any money you get is just a byproduct. For me, I don't have many talents, Teddy, but I've loved being a teacher. And the idea of simplification, these guys are both pretty good students. They get A's. I didn't get A's in school. I just stayed eligible to play ball.
Mm-hmm.
But for me, the thing Robert gave to me is an appreciation for simplicity as a teacher. I've never met anyone who hits the bullseye so directly and yet has a gift for making complex things simple. And that has been not only something I've learned from Robert, but hopefully a gift that I can credit him having given me to any degree that I have it,
Mm-hmm.
is when I teach, I'm hypersensitive to making things simple.
Mm-hmm.
And I think that might be the greatest gift and the greatest thing I've learned from Robert Kiyosaki in all the time I've traveled with him.
Right. Robert does do a very good job of simplifying complex concepts. But the thing that I've learned is that there's just so much opportunity out there to make money. I mean,
Always.
there's so many different ways. And, you know, like the infinite return that you two were talking about, Zach and David, it's just like, that's just one thing. And then, you know, you talk about real estate investing and all the tax benefits you get from that. You know, there's just so many opportunities out there to generate passive income. And, you know, one of them is stocks, of course. So, and now I think, you know, time to segue into the book here. But, you know, so the first part of stock market cash flow, you talk a lot about how to properly analyze stocks using both the fundamental and technical analyses. And, you know, Zach and David, you can answer this too if you want. What are the definitions of both the fundamental and technical analyses so beginners could kind of understand where you guys are coming from?
Those are pretty fancy words, you know, analysis. And I guess analysis means you're going to look at something. Why don't you take that one?
So fundamental analysis is when you look at a company's analyzing a company's fundamentals.
Yeah, I'd say that's true. You know, we play a lot of basketball here, and one of the things we look at are, you know, fundamentals. Your ability to dribble the ball, pass the ball, and shoot the ball. At that point, you're a true triple threat. And without those fundamentals of being able to dribble, pass, and shoot, you're going to struggle in the game. Well, there are certain fundamental things that a company should always do well. And we study financial statements a lot, right, guys? Mm-hmm. And so what is in a financial statement? Can you guys remember? What are some of the things we might look at?
The assets,
expenses, income, liabilities.
Out of order.
You know, if I were taking, you know, if people were to send us their financial statements right now, personally, right, we could tell very, very quickly which households were solid and which were on shaky ground by looking at those four things: income, expenses, assets, and liabilities. The same is true for a company. And so whether it's a nation like the United States or Greece or Venezuela, whether it's a company like Apple or Boeing, whether it's a church, a school, or even a household, there's just certain fundamental things that should be in order in terms of income, expenses, assets, and liabilities, that without a lot of time, you know, you don't need a 5-year degree and a PhD in economics to look at a financial statement and see if the income is bigger than the expenses, right? Mm-hmm. So when we talk about fundamentals, that's kind of it, right? It's studying the financial statement. As far as technicals go, you want to do that one?
Yeah. Technical analysis is charts and stocks and
trends,
uptrends and downtrends and side trends.
So it's interesting, Teddy, because there's often a detachment from fundamentals. I think that's the case right now in the market. You know, the Federal Reserve is pumping a bunch of money in to prop up the stock market, but when we look at the actual fundamentals, there's a disconnect. So understanding trends and the supply and demand of stocks is very, very important as well. Some traders are either fundamental investors or technical traders, and they fight over which one is best. We feel that why not use both? I love looking at a chart to find a great entry point. If I like a company fundamentally already, I say, well, where'd be a nice point to enter and get a good price for this? And if we want to do some trading and have a little fun with that, reading a chart is a big deal. So those two pillars of fundamentals and technicals are the foundation of making decisions in paper assets.
Right. Yeah. And, you know, it's really good that you combine both of them because, yeah, I've kind of noticed that it's either one or the other as well. So
there's people that think technical analysis is just reading tea leaves. But if you look at high frequency trading and algorithmic trading and really AI, artificial intelligence, we're getting to where 80–90% of the trades now are made that way, which is very important because these computers, you know, fundamental data changes 4 times a year with earnings. The technical data can change in nanoseconds. And certainly the people that use AI to trade use technical data more than fundamental data. So it's important for normal people like me and you to learn both.
Right. Yeah, and I honestly didn't know about what AI is doing right now. So thank you for sharing that.
Yeah, it's a big deal.
Yeah, and
AI,
it's just gonna,
more so,
snowball into being more and more prevalent in the future.
for
So,
sure.
you have a really good gist of both the fundamental and technical analyses. How often do you see stock traders fail to properly analyze stocks before purchasing them?
Wow, that is a tragedy. Literally, right now, as of this recording, we're in pandemic mode. We've got coronavirus in Arizona. It's really bad. Nevada's rising. Where I live in Utah, so that little Midwest, intermountain area is kind of a rough spot. And during the coronavirus, more people have tried to take advantage of the stock market, seeing it's on sale, right? Stock market drops. Everyone says, oh, I'm a professional investor now. Just to let you know some numbers here. In the first quarter of 2020, Ameritrade had about 600,000 new accounts opened. E-Trade had about 300,000 new accounts. And we had Robinhood, the little app for the Generation Xers and all the Generation Yers and the millennials. Their average account size is only like $2,000, but they had 3 million users sign up. And it's a tragedy because none of these people, I shouldn't say none, that's a blanket statement, but the majority of these people, I can't imagine studied or read a book or took a course or learned about fundamentals or technicals at all. They just thought, oh, this is easy. They really didn't respect the risk, and they poured their money in the market. And there was a story that was heartbreaking of a young man. He probably had $15,000, $16,000 in his account, maybe, in his 20s. And he didn't understand how to read his statement. He started trading options, and options are a form of leverage. And he didn't understand time decay and a lot of other important things. And he saw his statement and he misread it, thinking that he was in debt and they'd lost $700,000 somehow. And he left a note to his mom and dad, say, how could this happen? He took his life. So when I say it's a tragedy, I really mean that. It's, here's a young man that knew, and he just confessed in the letter. He says, I didn't know what I was doing. I'm sorry. My life is over. I can't be 20 years old and $700,000 in the hole. There's no way to get out of this. And so he took his own life. Now, that's an extreme example, but I know, and not everyone makes those types of mistakes, but I would just say that the vast majority of individuals do not do fundamental and technical analysis like the institutions do, and puts them at a grave disadvantage. Imagine, like, when we go out to do some target shooting, we have 4 unbreakable rules, right? When we handle a firearm. They're unbreakable rules. We would not go out and do that without learning those 4 rules. Well, the same is true with stocks, Teddy. Just can't imagine, knowing what I know about stocks and options, I can't imagine trying to trade without the knowledge I have so far. And I still feel I'm learning every year as a student. I consider myself a student still. So to answer your question in a word, no, they're not. The majority of people that are the average mom and pop, young person, college student, they're not using fundamental and technical analysis to the degree that they could.
Right. Yeah. And before I read your book, I was kind of the same way. I was just kind of freeballing stocks. Fortunately, I didn't go $700,000 in debt. I mean, God, that's just horrible.
Yeah, and then the sad thing is he really didn't go. It was an inability to read his statement the proper way. That'd be more a reflection of the amount of stocks he was controlling as opposed to what he was actually, the actual balance of his account. They haven't released the details of that, but it was a misread of his statement. He didn't actually lose the money. That's how bad the ignorance was in that instance.
Right. Yeah. And, it seems like risk management is something that's not common either with regards to investing in stocks. Especially now that there's a lot of volatility in the market today with, COVID and the economy and all these other factors that sort of contribute to the stock market going up and down. So given the volatility and, in general as well, what do you do to manage risk?
Well, I would say there's lots of different things. There isn't just one thing. I could give you a list of 3 or 4. For example, we talk a lot about insurance, right, boys?
Yeah.
I don't have a crystal ball that tells me whether our home will burn down today or not. And so we buy insurance just in case. So risk management is much less about predicting the future and getting it right, of just having a plan B. Plan A is we buy the home, we live in it, and it appreciates over time. Same with the rental properties. Plan B is if they burn down, we collect the insurance check. And so having what in stocks, they call that a hedge. Hedging your bet is a word. And the word hedge actually comes from Europe when they would have hedgerows. The Led Zeppelin fan will say, oh, there's a bustle in my hedgerow. Well, hedgerows originally, they could be, 6 meters square, high and deep, with hawthorn bushes with thorns, and they were a protection. So that's where the word hedge comes from. It's a way to protect. Another important one, Ted, is position size. If you go to a casino, there's going to be a table limit that limits how much a casino can lose on one position, one bet. Well, the same is true. We would not have all of our money in one place. We would limit a size of position. So if that one were to disintegrate or have problems, it doesn't affect the whole of the portfolio. Exit strategy is an important one. We'll come in. The problem with the Titanic wasn't that it sank. It wasn't that it hit an iceberg. It wasn't an incompetent captain. The problem with the Titanic was simply insufficient lifeboats. Had they had sufficient lifeboats, it's not fun to see the ship sink, but the loss of life would have been minimal. So remember, the problem with the Titanic was not that it sank. It was insufficient lifeboats. And if people don't have an exit strategy and a plan B, and I emphasize the word plan, before you get in a position, you plan it out and you foresee 3 ideas, up, down, and sideways. And you say, what is my plan for up? What is my plan for down? What is my plan for sideways? And if that's premeditated and predetermined, you're going to sleep a lot better at night and deal with the emotions of trading much more effectively.
Right. Yeah. And it seems like, you manage risk to maximize cash flow in the stock market. With Robert and Ken and my dad and all these people, people understand how to generate cash flow from real estate. But what do you mean when you talk about generating cash flow from the stock market, hence the title of your book?
So you guys enjoy real estate. They study real estate with us, and we're in some syndications. And what a syndication is someone will take a project, like we have some in Texas, in Fort Worth and Austin. So when we go down there, we check out the properties. And what that is you'll have a multifamily housing unit that is owned by a bunch of investors. And every investor has their share, so to speak, and they're paid through distributions from the profits of the project. So they collect rent, they pay their expenses. If there's profit left over, they distribute, and that's an important word, they distribute that on a regular basis to the investors. Now, during COVID, we had a couple months where they stopped our distributions, right, guys? They said, hey, we don't know if we're going to collect rent. We don't know if we should pay distributions. Luckily, this month, they resumed those distributions because it looks like they're going to be okay. In the stock market, it's the same thing. You have a whole bunch of people that own a company like Apple or like Boeing or, Kraft Heinz or whatever. And when there's profits left over, they distribute these and divide them amongst the shareholders according to how much ownership they have. And that word divide or distribute is important. In real estate, they call it a distribution. They distribute like dealing cards, right? They distribute the money out. In the stock market, we call it a dividend from the word divide. They divide the profits among the shareholders. So one of the most misunderstood and underutilized ideas is the dividend. And the reason is if you look at a dividend yield today, like maybe there's a stock for $100 and it pays $2 a year, they think that's only a 2% dividend. Yeah, but what if you bought it, 10 years ago? These guys bought Disney at $50, right? Well, now it's 100. Well, if it pays a 6% dividend now, that's 12 to them, right? So dividends are very, very important as cash flow, because ultimately, when you own a stock, you own a company, right? You own a company, and if you own a company, you should share in the profits of that company, and that cash flow should flow to you. So it's not just about buying low and selling high. It's about ownership. That's Buffett thinking. Other forms of cash flow that I just really love is the idea of selling options for prices that are unrealistic. If someone says, gee, I'll give you X amount for your house, okay, great. And they'll give me option money to do it. So if someone tempts me to sell at a high price, I'll sell them the option to do that, because it usually doesn't hit those prices. And if it does, there's things I can do. So those are the primary ways I like to get cash flow from stocks, is dividends and selling options.
Very good. Yeah, that was actually really descriptive. And it's really nice because you kind of go more into detail in the book there. So
especially on the options side, for sure.
Yeah, because I was a little bit confused about it ahead, before I read your book, but you did a very good job there. So
thank you.
Yeah. So the last question I have is for you two, Zach and David. I believe you guys are 14 and 12. You're very young. However, you guys are way ahead of the game when it comes to understanding money for, being at such an early age. So, you've been up on stage frequently. You've gone on radio shows. I mean, you're really an inspiration for me. So, I'm 25 and, you guys were doing this stuff at 10. So, I need to step my game up there. So, but what advice would both of you give to kids and people who are just getting started?
Play the cash flow game with your parents.
So what is the cash flow game?
Cash flow game.
The cash flow game is a simulation of life if you're trying to invest and get out of the rat race.
What's the rat race?
It's where you have
stuff
less,
where
and
you don't have your passive income greater than your expense.
Talk a little bit more about that. What does passive income greater than expenses mean?
It means that
it's how you if you have your passive income more than your expenses, you're financially free.
So if I have a job, I'm in the rat race.
Yeah.
And I have to work to pay my bills, right?
Yeah.
That's my expenses. But if I have assets that create cash flow, that's the name of the game. Then if that cash flow pays all my expenses, I might not be a millionaire or billionaire, but I'm out of the rat race. Is that the point?
Yeah.
That's it.
That is.
That's actually, it was funny. You mentioned that Robert calls these guys up on stage, and Robert has no script, right?
Yeah, I'm aware.
I mean, you bet as well as anybody. You don't know where it's going to go on stage. And so when he called, I think, David, you were how old when we were there? Was that 2 years ago? Argentina.
Yeah, in Australia, it was 2 years ago.
I was 9 in
Nine?
Argentina.
9 years old. So I'm a little nervous being the dad, my kid's going to fall on their face, and there's, 3,000 people there, and it's translated and all this. And it was really interesting because Robert would just ask them general questions, and it was that time in the cash flow game that helped them, really articulate what they wanted to say. And so I would agree with the boys that that's really was our foundation, is playing the cash flow game as a family. And when we started, they wouldn't have been old enough to play up on their own. So I would team up with David, Marcy would team up with Zach, and we would do it, them against us. And that's how we started playing. And now you guys will play it on your own. They'll go play it on their own now. So it's pretty good.
Yeah, very good. Yeah, no, the cash flow games, I've played it a few times. I mean, I've made mistakes, but thankfully it's a simulation, right? I'd rather do it there rather than in the real world.
Have you ever lost a cash flow game? Many times.
Yeah. But it's good. I mean, you learn from your mistakes, and you can't fear failure. And that's, that's another thing that Robert teaches. So, definitely recommend the cash flow game. And obviously, since it's Ted's book talk and we're talking about a book, I
appreciate
strongly recommend that you guys out there purchase Stock Market Cash Flow, because obviously there's a lot of ways that you can mess up investing in the stock market, and you can invest in stocks the right way if you read this book and apply it to the real world. Now, with that being said, thank you, Andy, and thank you, Zach and David, for coming on. It's a pleasure to finally see you guys again.
Really good to see you, and we just enjoyed being with you. You know, the Rich Dad Advisors, one of the byproducts that I didn't see when we first assembled the group was how much our families would, you know, become close and mean so much to each other. So that's just been a great bonus of being a part of that group. So we love you all.
Yeah, and we love you guys too. So hopefully we'll get to see you sometime after, you know, COVID blows over.
I'm all for it. How about a trip to Lake Tahoe?
Yeah.
You guys okay with that? Maybe we meet in Tahoe. That's in your neck of the...
Yeah, I'm cool with that.
All right.
Yeah, come on out, and you know, we'd be happy to show you around out here.
Fantastic. You guys got a nice place up there. We'll invade.
Oh, yeah. Awesome.
Awesome.
All right. Well, yeah, have a good one, guys.
Thanks so much, Ted. We'll see you.
Bye.
See ya.
Bye-bye.